Good morning and welcome to the Market Prep. Happy Capital Preservation Friday, everyone. Friday, June the 23rd. My name is John Hoagland. As always, thanks for trusting me with your time. Our focus here is always on seeking accurate context, good risk management, and remaining patient in our trading. Well, as far as economic releases this morning, it's been a kind of an early morning from some of our talking Feds. I think we had Bullard, Bostic, and Meester speaking early this morning, and Meester again speaking this afternoon at about 12:40 Central Time. Other information, 8:45, we're looking at the services and manufacturing PMI flash, the composite PMI flash. Really no significant changes expected in regard to those numbers. So yesterday, Powell remained kind of hawkish on his stance on rates on his trip to the Senate, and kind of stepped on some short time frame upside breakout as the S&P braces for its first down week in 6 weeks. U.S. equity futures are set to open lower. We've got the NASDAQ down over 1% right now. Things getting a little bit crazy here. I don't know what happened, but something crazy going on here, it looks like. We've got at least until now, the S&P and the NASDAQ kind of coming back down to that trend line that we broke out of to the upside yesterday. We'll have to see how this plays out for us today. There's the possible idea here that we haven't broken the backs of the longs yet. We may see these markets continue this move to the downside for the time being. Next week, the last week before the Independence Day holiday, kind of thin on economic data. Highlights are going to be Powell's speech on Wednesday and then the GDP final numbers on Thursday. If there's no major changes or surprises with that GDP number, I'm not expecting it to be all that impactful. This is the third attempt at figuring out what the GDP was, I think, in the first quarter. So maybe the first quarter. So this will be our last look at that. And crude prices have tested support levels here. They're currently testing the weekly kickoff low as we speak. So we're kind of the specter of higher rates and slowing economies kind of stepping on demand. So demand in question for crude oil as we speak. The VIX this morning, 13.4, up a little bit. Dollar index 102.8, up a little bit, and the 10-year yield just sitting there at 3.7%, as you can kind of see that in pricing in the 10-year, and we're going to check that out here very shortly again. So make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you can get notification when we do go live. And it's Friday. It was a short week for me. I entered the week here on Wednesday, and already it's Friday. Looking forward to a restful weekend and some more fun thrills and chills in the markets next week. The following week is the Independence Day holiday, so a lot of folks may be taking some time off, but there may be some really cool fireworks coming into our Independence Day holiday this next week or the week after. Stay tuned. Good morning, everybody. We've got Caprice 101, first in the room winning the prize. Rooster, crowing early. Good morning, Shaw, Jules, Jason, Josiah. Good morning. Casey, Hagel Matters, Nasdaq, Denise, good to see you. Steven, Dan Trader, always good to see you. Good morning, Top Step, y'all. Will, good to see you. Ground Zero, Scott saw, and he conquered. James, Bill, Jason, George, Lacey says good morning to everyone as well. John, good morning. Travis, DA, John Hukel, the Rooster, made it all back Friday. Nice job. Make it all back Friday. Well, we'll see about that. Just trade you what you see, stay in your process, stay in your strategies, and hopefully good things will happen for you today. Dan Trader, something different watching from a train today. Well, hopefully you're going somewhere fun. DA, good morning. Yes, on the rebuild, does Top Step give a free reset? I believe that is the case. Sarah Hall, good morning. Prayers and love to you and happy Friday. Cheers to you. We'll have a beer with you later. Michael, DA, Fred Decker, good morning. Good to see you here this morning. Les, Rusty Golfer, Robert, JD, Shy T, RCU, good morning. Henry, J, Index Trader, good morning from India. It's good to see you with us this morning. Alejandro, Wiley Pro, Wild Pro. If I messed that up, I apologize. Jay, good morning. I'm up on the week. Good. Good. I was kind of worried about you trying to swing for the fences today, Rooster. Just follow your process, right? George Duque, JD, good morning. Luke Irwin, Rob T, it's good to see everyone. And weekend with mom and brother, all good. Excellent. That's always a good thing to do there, Dan Trader. Pete, if this is your first trip to the market prep, welcome. Maybe a couple of names that I'm not sure I've seen here before. Thank you for chiming in and saying good morning. And again, we're going to see what we can find as far as context is concerned. We're going to start here with the daily in the E-mini S&Ps. Let's take a dive in. Wow, we've got something happened here. Let me take a quick look. Oh, Bostic. He favors no more rate hikes for the rest of the year. Inflation has eased significantly, but getting to 2% is hard. Yeah, it's one of these early speakers this morning put the whammy on some of the markets here. Well, let's take a look and see what we've got going on. So here's the daily in the S&Ps. We had an attempted breakout of a bull flag yesterday that really just did not perform well, particularly in the S&Ps. The volume was a little bit low, and we lost open interest instead of bringing in new business to the upside on that move. I was going to be kind of looking at the fact that the auction process to the upside, the breakout of the short time frame break, did not perform well. So it was more of a short covering than new buying coming into the marketplace, which is a little bit unnerving for anybody who was looking for continuation to the upside. What else do I have here? Well, that short time frame breakout is certainly at risk now. Take a look at this on the 30-minute chart. So here was that breakout, and it took all day for the decision of traders to bring price higher. It was one of the reasons I wasn't all that impressed with this breakout. Number two is the fact that it was lower volume and we lost open interest. So it wasn't like the market was bringing in business. It was taking care of old business. This was more of a short covering rally than a breakout and a potential continuation. And that's proven to be true today. We did put up a late spike yesterday at the end of the day, and that has already been wildly rejected. We've got overnight inventory to the short side, some possible reconciliation in here, but now we're seeing the market push back down through this trend line. I found it interesting that last night the market kind of held this line. Now it looks like it's ready for a move or a continuation to the downside, which could take us to the weekly kickoff low 43.70 or even points lower. If this fails, the eventual potential target for this is the lower trend line. So we may have some bumpy roads ahead of us here, and a lot of that, of course, depends on what is being digested now and what traders feel about this failed breakout to the upside. Here's the TPO chart. Yesterday, initial balance low. Here's our late spike. Even though it's probably not even going to be in play today, the base of the late spike is 44.2350. What is a late spike? A late spike is when the market extends the range at the end of the day and then closes in that extension. So this late spike here is very small. What the rule is if we open above the late spike, it's favoring acceptance of higher pricing. In the late spike, kind of a secondary probability of acceptance of higher pricing. Opening below the late spike is rejection of higher pricing. Now, opening below the entire range below the late spike, do you think the market's rejecting those levels up there? Is it going to make it any easier for us today? Probably not. Nothing makes things easier. If there is a a good target down here. I'm kind of looking at these points of control down here, particularly this one because it's the most prominent. So we're looking at a move possibly down to 43.51. I mean, there's plenty of weak structure down here. There's lots of naked points of control, lots of little holes, lots of little areas that didn't get a lot of attention on the way up. Take a look at this. This is the composite profile. It goes, I think, to the beginning of June. And this is that area we were just looking at in the profiles. This area did not get a lot of attention. It's likely to be somewhat supportive because the market left this area of balance, drove quickly into a new area of balance. So this area down here, our current low, anywhere in this area could end up attracting buyers or running out of sellers, which is sometimes just what happens in the auction process. Price gets too cheap, sellers won't sell it anymore, buyers take over, and the market turns the other direction. Now, this is yesterday's profile. I'm going to add this to the composite, and it just makes this even more stark. The lack of volume, the lack of attention that the market received at this area makes it somewhat supportive. And again, our overnight low is right in that area. So it's going to be an interesting trading day. Even if you don't trade, watch what happens here because this is kind of a critical area. You can almost see that thin area in the profiles right here. This is the daily chart. Here's the 30-minute chart. And here it is again. That thin area didn't get a lot of attention. Is it going to repair? What would repair mean? Repair on this daily, on this composite profile would push us all the way back down to 43.30, the value area of the overall period here. So going from high volume node to high volume node through the low volume node, we've got to get through this area first. Going to be, when we're looking at this, we were in range and largely in value earlier this morning. We're now opening out of balance and out of range. This gives us the opportunity for the gap rule. Gap rules. If we don't close the gap relatively early, then we trade in the direction of the gap, which would have us looking lower. Right. All right. Let's take a look at the crude oil, which is just about ready to open up. Wow, we are at a blazing pace here this morning on the market prep. So here we are, range bound, weekly kickoff low, 68.20, excuse me. 68.06 is our current overnight low. It looks like we're going to be opening very close to an important inflection level here in crude. We saw them pull back yesterday off those highs, which added 14,000 new contracts. This was new selling coming in. This is, a kind of encouraging for a potential breakout. We have to see what happens down here at weekly kickoff low. And last week's low is going to be a bit of a pickle below that as well. So looking at the weekly kickoff 68.20 as a pivotal level today, and that can make it dangerous. If it becomes magnetic and we use it as a pivotal level, in other words, short below, long above, short below, long above, short below, long above, we can get chopped up. What we're looking for is a clean break below or a clean rejection back above this important level, which is going to be, we're 5 seconds from the open. We're going to take a look at this and watch this on the 30-minute chart to see what happens. We've got overnight inventory to the short side. Okay, we got overnight inventory was short yesterday. They continued to get paid. Overnight inventory is short today. They're continuing to get paid. Here's our first minute of trade. The market is attempting a clean break below the weekly kickoff low. The high of the initial balance so far, 68.23. It's all part of the zone that is the weekly kickoff level. If we leave that opening range at the high, that might kind of indicate a clean break below that level, and we would look to continue in that direction. Doesn't look like that's going to happen necessarily, but this is opportunity because it allows us to limit risk. Allows us to limit risk. That's the second thing, right? Context, risk management, always thinking about managing your risk. This to me looks like a relatively decent opportunity because it is so close to an important level and it gives us the opportunity to limit that risk. Here's the TPO chart. So here's our gap. High of the high of the opening range is 68.23. 68.23. It's a 21 tick opening range if that is the low of the opening range. So we may come back and take a look at how this trade is doing near the end of the market prep here. Let's take a quick look at the NASDAQ, which is a little bit different than the S&Ps because it added open interest on the breakout to the upside above the bull flag. Something has changed. These talking Feds have put another foot on the head of any rally that's been able to go on since yesterday, and it seems to be the same. So yesterday's rally at least brought more open interest, an additional 3,600 on open interest in the NASDAQ. Volume was just okay, wasn't tremendous, so not really that excited about the breakout that occurred yesterday. Here it is. Okay, here's that breakout. It was kind of similar to the S&Ps. It was a lot deeper in the channel here that gave us this opportunity. But, it took all day to accept above this trend line. And once it did, it set up a late spike. Well, again, our late spike is showing signs of rejection. We're not creating a gap below yesterday's low in the NASDAQ the way we might be in the S&Ps. However, the overnight was able to hold this line till they started yakking, and now we may have an opportunity back at this trend line in one direction or another. It was resistance, then became support, came then back down through that level. Is it going to be resistant today? It's only that I would look at that because it's an opportunity for me to limit my risk. I'm always, every time I think about taking a trade, I'm thinking about it from the risk side first. Where does this trade show that it's wrong, and how close can I get to that level for my entry? All right, here's the TPO chart from the NASDAQ. Let's go to this one. Initial balance to the low of the day, a normal variation day, leaving a late spike. The base of the late spike, 15,194. Is it even going to come into play today? Well, at least we had the opportunity in the overnight to trade above it, but with the open below the base of the late spike, the nuance is the market is accepting lower pricing. So a move back to that trend line might be something that I would be thinking about possibly taking. What else do I have here for this? It was a neutral normal variation day, lots of excess on this low. So the NASDAQ has begun to start to perform better than the S&Ps on the upside, where it was kind of suffering a little bit earlier in the week, I think. Here's gold. All right. So disappointing downside continuation yesterday. We only added 1,000 in open interest on lower volume. That's giving this auction process, this move to the downside, I'm going with a C minus. It didn't bring a lot of open interest, and volume was lower on this continuation. Tisk. It's not doing its homework. It's not performing well to the downside. Now we're seeing a move in the opposite direction. There was a lot of space below, but my question was, why are we going there? The dollar's off its highs. The euro was screaming to the upside until this morning, or until yesterday, and the gold just continues to get smushed. Why? That's my question. There's a lot of space below, but why? Here's the 30. All right. So here's that weak move to the downside yesterday. Now we're seeing overnight inventory to the long side continuing to get paid throughout the session today. This naked point of control obviously going to be a visual target, but what I'm really looking forward to is the opportunity to participate up here near weekly kickoff low, which is 1945. 1945. Dan would probably joke and say that's the year I was born, but he would be incorrect. 1945. Another interesting opportunity for us there. TPO chart, IB high, normal variation, extreme day on a lower volume and a weak increase in open interest. This might hold as a low for a while. Even though there's low excess here, there still is excess. We're opening above it, driving away from it. Obviously, this may be an idea that we've gotten our shorter time frame traders too short in the hole, and we're going to be seeing this market head in the other direction, which we obviously are right now, with the benefit of one of the talking Feds, whatever it is that they said. Here's the euro. So the euro, gold is down here. The euro is up here. This is not based in the dollar. It's based in something else. And I think that's what gold is kind of looking at as well. Hang on a second. All right. So there was a plethora, that is an industry term, a plethora of European data that came out overnight. It kind of gave a little bit of a shock to the euro. Some British retail sales, Spanish GDP, among other things, were the things that came out that started this downside move. Yesterday, we did add 5,000 contracts on higher volume and an overlapping to higher range, but a downside move. Here's the 30-minute chart. Yeah, Dan, time for the rally shirt, the rally sweater. I'd be kind of hot, but we might have to try it. So here was our breakout of the bull flag. It performed okay. Yesterday, not so much, just basically keeping value where it is. The numbers came out yesterday, last night. And pow, a lot of our overnight shorts got paid. Where are they starting to get a little bit nervous as we get closer and closer to weekly kickoff low? So the overnight inventory was very short. You can see it starting to kind of pull back now. Another look at this trend line here might be something I would be looking at, because it was 1, 2, 3, fourth point of contact. That's when the breakout occurred. The breakout has failed, but we've already traded all the way to the lower end of the channel here. So the market may just hang over all day today. Let's take a look at the TPO chart. So IB high, double distribution, extreme to, kind of extreme to the downside. We got a gap. Doesn't look like much like we're going to close the gap. We've got visual targets down here. We've got visual targets up here. The market, it seems to be kind of stunned. It's like it got punched in the head and it doesn't quite have its feet yet. So we're going to be patient, wait for the extremes, and see if we can find opportunities if we are going to be trading the euro today. Look at the 10-year. Up, down, up, down, up, down, up, down, up, down, up, down. Very range bound, very uninterested, almost uninteresting, with rates just kind of holding where they are, probably waiting for the July meeting now. There's, there is opportunity here, and that opportunity is at the extremes of the current area of balance. The balance rules are we sell against the high and limit risk that way, and we buy against the low and we limit risk that way until there's an accepted breakout outside of this area of balance. That's the plan. An accepted breakout is something we would want to go with, because that can be a larger opportunity. Dan, yeah, my dead shirt, I got a whole bunch of them now. Went to go see the Dead Company a couple of weeks ago and bought a whole bunch of t-shirts. So maybe we'll put that on Monday, see if we get a rally going here, right? Here's the 30-minute chart. So we really had some kind of coiling activity we were looking at yesterday, but the breakout below it did not provide any good opportunities. What was the volume like yesterday? Just looking at these volume bars, it was just okay. Yesterday we added 15,000 in open interest but in the 10-year, that's a drop in the bucket. It's not a big jump in open interest. There's 4.5 million contracts open in the open interest. 15,000 isn't that impressive? So now we've rejected down here. We're rejecting here. We're testing back up to the upper area of the area of balance. If we're going to be looking at this area of balance horizontally, this is the kind of first step resistance up here. This first step support down here. Because horizontally, we've put in a bunch of highs here. We've put in a bunch of lows here. And that's where our opportunities lie in range-bound activity. Nobody says or promises that the range is going to remain, but it gives us the opportunity to limit risk. That is the goal. Here's the TPO chart. I heard that. Powell is apparently a big dead fan. Yeah. So here you can see it really graphically. We've got highs up here. This has been so far in the last week or two proven to be too expensive for traders to continue to buy it, too cheap for traders to continue to sell it. And this is where the opportunity lies in range-bound trade. I used to call these days cash register days, because once the extremes are established, if there's no breakout of any substance, you're selling the high, you're buying the low. You're selling the high, you're buying the low. You're selling the high, you're buying the low. In a longer time frame, that's what we should be doing here until proven wrong, until it breaks out again with some substantial participation. Here's the 10-year or the natural gas. We've rolled today into the August contract. Volume is finally higher in the August contract. So prices seeming to remain in a kind of range-bound established range. This is sometimes just what happens in rollover. The longer time frame traders don't want to be involved in directional activity when they're trying to get a cheap rollover done. So if that's the case, our extremes are established. We're going to focus on those extremes from maybe our bigger opportunities, because that's where we're really going to be able to limit risk. It's still in rollover. I don't think I would be leveraging into any opportunities in this market during rollover, but we have the overnight inventory got a little bit perhaps long. We're now kind of recovering that. Our upper area of balance here was a good opportunity for us, possibly to look for a short. I probably would have been looking more up here. Didn't give us that opportunity. Well, where's our opportunity below? It's down here. Rejection, possible opportunity here unless something more serious is going on. And the August contract, checking this morning, was a 10-cent premium to the July contract. So there's not a lot of adjusting of levels that you're going to have to do if you're going to be trading the natural gas. What a wicked market this is. Wicked market. Let's go back and check on what's going on in crude oil. All right, so here's that 30-minute chart. Looks as though we may have left the opening range as the high of the session, and we're getting some continuation to the downside. This would be something I would so far consider a clean break below the weekly kickoff low. Opportunity. What are we facing down below this? Last week's low. It's another 60 ticks before we get to that. So not a bad opportunity for us. All right. Well, it's Friday. I'm going to take the profits that I was able to accumulate in the first 2 days that I was here this week, Wednesday and Thursday. And I'm going to preserve capital. That's what Friday is, right? Capital Preservation Friday. I'm going to be patient. I'm going to make sure that a trade has to come to me. I'm not going to go looking for trades because God knows I'll find them. And the trades that come to find me tend to be the better trades. So we're going to get, we really ripped through this prep this morning. Hopefully it's been helpful. Our goal here is we are looking forward to your success. So let's take our deep breath. Let's stay humble, grateful, and creative and centered in our trading today. You start losing it, you're not making good decisions. Best decision is to walk away. So have a great day. Have a great weekend. We'll see you Monday morning on the market prep. We got a lot of good things coming your way in the coming days, weeks, and months. And I'm looking forward to spending that time with you. So have a great weekend. Again, stay kind to yourself, be kind to others. Pray for peace. God knows we need that. And have a great session today. See you later.